Okay, this is the homework for section 4E. So number one, wants you to calculate three things: the gross income, adjusted gross income, and taxable income. So gross income is all of the money coming in. So on this one, we will have the 84,000 because that's her salary. So this 84,000, and then we're going to add what she earned on her savings account. And nothing else there is income, so we're going to add those two together for the answer. So we'll get 84,350. And on the adjusted gross income, we're going to take the gross income. So I'll do GI for the gross income. And then we're going to subtract anything out. So like, for example, on this one, the retirement account, we're going to subtract out because that would be the pre-tax dollars. So if it's any help things or anything related to that, we would subtract that out. So retirement, health, any of those things that we'd subtract out. So on this one, we would do the 84,350, that gross income. And then we're going to subtract the 3,300 because she doesn't have to pay taxes on that. And then we will get $81,050. And remember, when you enter these, don't put the commas in there. So there's the answer for the adjusted and then this first gross income. Okay, the taxable income. On this one, we're going to take the adjusted gross income and then we're going to subtract out any exemptions and subtract out any deductions. So on this one, we would take the 81,050, what we calculated on the second part. And then we're going to subtract out her personal exemption. And sorry, some of this is spelled wrong. I just copied and pasted it, and I'm just noticing it's spelled wrong in Maple TA too. So we're going to subtract out that 3,900. And then we're going to subtract out the deduction of 6,100. She'll end up with 71,050. Okay, number two. On this one, it's a multiple choice. So it says Jim and Joanne contributed $1,500 to charities, paid $7,850 in home mortgage interest, and paid $2,755 in state taxes. They're entitled to a standard deduction of $12,200. Should they itemize their deductions or take the standard deduction? So if we look at, actually that one's not going to matter. If you add up the amounts to see if they should itemize, so the 1,500, the 7,890, and the 2,570, or sorry, 2,755. If you add these up, that amount is going to be a little less than this 12,200. So because of that, they should take the standard deduction because that's higher. So you should always take the higher one because that means that's how much you get to subtract out to then calculate your taxable income. So just like we did on this last one, the taxable income, we subtracted the exemptions and deductions. So you don't want to subtract out the highest number you can because then you're going to be taxed on a lower amount. So that's for number two. Number six, on this one, the table in your book let's see, it's on page 257. So this is the chart you're going to use. So in this one, George is single and had a taxable income of $76,250. So we need to compute his federal income tax. So on this one, we need to go to the table in the single column, and then he's in the range, he's in that 25% because he makes more than the 36,250 but less than the 87,850. So he's going to be in the 25%. So a lot of people think that means, okay, well, you take your taxable income and multiply that by 25%. But that's not how it works. So this is how I like to think of it. So if we draw this line here, let's say this is 0. So the first cutoff is going to be making $8,925. And if you make in that range, you're going to pay 10%. And then the next cutoff is going to be 36,250. If you make in that range, you're going to pay 15%. And then the next one, we could keep going for all of the numbers, but we're just going to go up to 25% because that's the range that this problem falls in. So 87,850. So remember, this is just for singles. So if you make in this range, you'd pay 25%. But what happens is you only have to pay 10% up to this 8,925, and then all the money in between this you'd pay 15% on, and then this is the amount you'd pay 25% on. Because if you think about it, let's look at this 36,250. Let's say your taxable income was 36,251. It's not fair that you're going to have to pay 25% when you only made $1 more. So because of this, you would be paying 10% on your first $8,925, and then you'd pay 15% on all the amount that falls in here, and then you'd pay 25% of the amount that falls in this category. So in this case, we're looking at $76,250. So we need to calculate the tax. So let's calculate the 10% first. Well, we know we're making between 0 and 8,925. So we're going to take 8,925 and we're going to multiply that by 10%. So 0.1. And then the next one, to calculate what we're going to do in the 15%, we've got to take 36,250 and subtract that 8,925 because we've already paid taxes on that. And then the amount in that range is what we're going to pay 15% on. So multiply that by 0.15. And then the last one is going to be 76,250 minus that 36,250. We're going to see how much is in that 25% range. We're going to multiply that by 0.25. So we end up with these amounts. And then if we add them together, we're going to get $14,991.25. And on these problems, on all these tax problems, we always round to the nearest dollar. We don't do the cent. So on this one, we'd end up with the 14,991. Okay, this next one's the same type of thing, except they're going to qualify, or they're going to file jointly. So we're looking at another column. So on this one, we're looking at that second column, married filing jointly. And we'll just do the cutoffs for this. So here's our 0. And then the 10% goes up to 17,850. So this is 10%. And then the next cutoff is 72,500. And here's the 15%. And then the next one is 146,400. So we're going to be in here somewhere with the 101,500. And again, we're going to pay 25% of this. Okay, so let's figure this out. The first one, if we go through and subtract the 146,400 minus the 72,500, we're going to get 29,000, and we've got to multiply that by 0.25, which ends up with 7,250. And then on the next one, we're going to take the 72,500 minus the 17,850, and we end up with 54,650, and multiply that by 15%, and you end up with $8,197.50. Then on the last one, we'll just have the 17,850, multiply that by 10%, and then you end up with 1,785. So now we need to take all these amounts and add them together, and you'll get $17,232.50. And then it says that they have a tax credit of $2,000. So the tax credits come after you've calculated the taxes. So you wouldn't subtract that $2,000 from this original taxable income. So now subtract off your $2,000. So we get $15,233 or $32.50. And then we need to round to the nearest dollar. So on this one, your answer is going to be this 15,233. Okay, on number 8, we need to calculate how much will their tax be reduced if they qualify for the tax credit. So on this one, for number 8, you're going to get the tax credit whether you do the standard deduction or itemize your deductions. So it doesn't matter either way, and it doesn't matter the tax bracket that you're in. So this first one, the answer would be 1,300. The next one would be 1,200. Then this next one, for number 9, this is a little different. This one, so it wants to know how much will their tax bill be reduced if they contribute to charity. So on this one, you're only going to save money if you're itemizing your deductions. So on this first one, it would be 0 since you're taking the standard deduction. On this one, you would take the $1,000. I'm almost out of time. Multiply that 15% to get 150 for your answer.